When you watch videos on life insurance, most of the content focuses on bank on yourself life insurance. And I get it. It sounds exciting. But what many people don't realize is that those strategies only work if you already have the money up front or you build up the cash value over time. But here's what no one seems to talk about: limited pay whole life insurance, which consists of 10 pay, 20 pay, 30 pay, or pay up to age 65 whole life insurance. These policies provide the most benefit to everyday people because they have something powerful, an end point. You can actually pay it off, and once you do, the coverage is yours for life. And guess what? You can still use that cash value to bank on yourself, fund emergencies, or even create a tax-free retirement strategy. So today, let's talk about what these plans mean, how they work, and how they can fit into your financial goals, whether you're just starting out or planning your future. So let's get started. Understanding whole life. Whole life insurance gives you protection and builds guaranteed cash value that grows tax deferred. Part of your premium goes toward your death benefit, and the other part goes toward your cash value account that earns interest over time. But unlike term insurance, whole life doesn't expire. And with these limited pay options, you can actually finish your payment and enjoy permanent coverage with no additional premium. That's why I call it insurance with an end date, but benefits for life. Let's talk about the 10-pay plan. Now, the 10-pay whole life insurance option, you pay off the policy in just 10 years. The premiums are higher, but after a decade, you'll never pay again. Your policy is fully funded for life. It's perfect for people who want to front-load payments while their income is strong, retire debt-free and payment-free, build cash value fast for future use. Now, for example, one of my clients, age 52, wanted to retire at age 62. We used 10-pay whole life insurance, so premiums would stop right before retirement. Now that policy continues to grow in value, and he's got both coverage and cash he can tap into later. Now let's move over to the 20-pay plan. Now, this is the most balanced option out there. You make payments for 20 years, and then your policy is paid in full. The premiums are more manageable, but you still finish before retirement age. That makes it a great fit for families building long-term wealth, funding college savings, or wanting predictable coverage that eventually becomes a set-it-and-forget-it asset. Financially, it's like paying off a home early. You own it outright, and it keeps growing equity for the rest of your life. Now, let's go over to the 30-pay plan. The 30-pay whole life option plan spreads your payments over 30 years, making it the most budget-friendly. It's perfect for young adults who want to lock in lower rates earlier but still enjoy the benefits of permanent life insurance. Because you're paying over time for a longer period, it builds cash value more gradually. But it's ideal for long-term planners, first-time parents, or anyone juggling multiple financial priorities. Think of it as planting a tree early. It grows quietly in the background until one day it provides real shade and security. Let's move over to the pay to age 65 plan. With the pay to age 65 whole life plan, you can make payments up to age 65. After that, your coverage is fully paid. This setup fits perfectly for people aligning their insurance with their working years. Once you retire, you stop paying, but your protection continues for the rest of your life. It's a great strategy for late starters or anyone who wants guaranteed coverage that transitions smoothly into retirement. Now, why starting young matters? Now, let's talk about how these plans benefits babies, kids, young adults, and anyone under age 45. When you buy early, the premiums are drastically lower and the cash value has decades to grow. That means for babies and kids, parents or grandparents can lock in lifetime coverage at the lowest possible rate. By the time that child turns 18 or 25, the policy may have enough cash value to help with college, a first car, or even a down payment on a home. For young adults, a 10 or 20 pay plan can be completed before any major financial milestones like marriage, kids, or buying a house. Once it's paid up, it's one less monthly bill for life. For adults under 45, you still have time to build strong cash value and finish payments before you retire. It's a smart move for anyone who wants diversity beyond their 401ks with a tax-free cash value component. The earlier you start, the smaller the payments, the faster the growth, and the stronger your financial foundation becomes. Now, which one is right for you? Here's a quick summary. 10 pay, perfect for fast payoff, higher cash value growth. 20 pay, balanced for long-term affordability and lifetime value. 30 pay, great for younger, budget-conscious buyers. Pay to age 65, ideal for aligning with your working years before retirement. Each one fits a different season of life, and I can help you figure out which one fits your goal and cash flow best. Now, for some or most people, you've never heard of limited pay whole life insurance. It's almost like the secret whole life policy. This type of life insurance can eliminate the excuse that life insurance is a permanent bill, because now you know your policy has a price tag, and once it's paid, it's yours for life. And of course, the younger you are when you start, the less expensive it is to pay off. It is real ownership, real cash value, and real peace of mind. Now, if this content was helpful, please share it with others or someone who may benefit from this topic. And don't forget to like and please subscribe to the channel. But don't stop here. Check out my next video right here for more insurance and financial tips. And as I like to say, call Jay today. Thanks for listening.